The S&P 500 was up 0.51%, closing at 6448.26. It was a bit of a mixed picture across the broader markets. However, we did see a couple of larger moves, including Google, which was up over 9% today, as well as Apple, which was up over 3%. So we're going to take a look at the gamma exposure data on Apple and Google later in the video. But in terms of the S&P 500, we did see a late day rally bouncing off of the 6430 level all the way up to 6450. Gamma exposure remains concentrated at the 6500 strike, and for now the lows of yesterday around 6360 are holding in place. So I think as long as these lows hold, which as you can see was a previous support back in the middle of August, as long as those lows hold, I think we have a chance for higher prices, potentially all-time highs getting back above 6500. Gamma exposure continues to be skewed to the upside at these larger strikes, and if we come out here to the daily candlestick chart, we can clearly see this as we scroll up the options chain. We can see gamma exposure on the positive side skewed all the way up to the 7,000 strike. So we are above the 50-day EMA, which is this red line on our chart, currently sitting at 63.09. And in general, this trend is holding in place. The trend that basically started early in April remains intact and heading towards these larger gamma exposure concentrations. In terms of the net gamma exposure data, we are in positive gamma exposure territory with total gamma at 1.3 billion, and volatility, of course, remains extremely low. Our GEX weighted volatility gauge showing that volatility has only been lower 8.2% of the time in the last year on the S&P 500. So this is a classic recipe for a buy the dip environment, and you can see it very plainly on our chart. Very low net negative gamma exposure at lower strikes with large positive gamma exposure up to 7,000. And so that's why we believe buy the dip is still intact, even though we may get some sell-offs here and there during the month of September. We think ultimately those dips will be bought for an end-of-year rally.
Thanks, Anthony. I've been watching IWM pretty closely, mostly because it's been outperforming the other indices recently. The last couple of days, it did lose the daily whole moving average, which is this orange line, but we've still just barely maintained this 9-period SMA at 233.59. Today's close coming in at a mere 8 cents over that line. And there was a time in the middle of the day that the indices really looked more bearish. So it's no surprise we did see somewhat of a recovery by the end of the day. We do see this positive GEX at 235 and also at 240 that's caught my attention. So it wouldn't surprise me in the short run if we saw this positive momentum continue and maybe we see IWM retest this hole at 236.52. That would get us just above the 235 line, which we did touch today, and that is the upper dealer cluster zone. And 236 and 237 are also still within that zone we would consider the upper dealer cluster. But we do need to watch that net GEX is still declining. We've had 4 consecutive sessions in a row with GEX declining, now in negative territory for IWM. Bulls are going to want to see GEX turn back up like we saw after the mid-August pullback in order to keep the bullish dreams alive here.
Thanks, Sean. You know, I mentioned at the beginning of the video, Google being up 9% today, closing at 230.66. Google really breaking out on some big headline news. Gamma exposure is pointing higher still, with positive concentrations growing all the way up to the 260 strike. Today's price action brought us just above our upper dealer cluster zone, so this could be an area where we do see some selling pressure from option dealers, which could result in some consolidation or a slight pullback, basically into this main overall trend. Google is a name that we were trading recently. Unfortunately, we exited just a bit too early. We were actually playing the 200, 210 call debit spreads in the September 19th expiration. So we ended up closing those out as Google came in trading at 209.58. Obviously, we could have collected a lot more on those call debit spreads if we had just held on just a little bit longer. Still a great trade. We collected over $16,000 on that particular trade as we had 50 contracts of those 200, 210 call debit spreads. But the main point I want to emphasize here is our initial reading of Google using gamma exposure and the overall trend. You know, Google had really found some support in early July off of the 50-day EMA. This is from our initial post when we entered the position back on July 24th, and we were showing gamma exposure growing at these higher strikes at 200 and above. And so we thought there was a really good chance potentially after some consolidation for another leg higher. And so we did get that leg higher all the way up to the 210 level in pretty short order. And ever since our exit, we've actually been looking for a potential pullback to be able to re-enter this name. And so obviously we didn't get that pullback opportunity with the big headlines today, but I do think there is still opportunity if we can see some consolidation, if we can see the 50-day EMA catch up to these levels. I wouldn't mind entering a position if Google does retrace back to like the 220 to 225 zone. That could be an interesting place to enter for a long bias trade for potential continuation up to some higher strikes into year end. So we'll keep this name on our watch list. By the way, if you want to track our trades in real time as we manage our options portfolio, you can become a member at geeksoffinance.com. Check out the links in the description below.
Let's take a quick look at the VIX. Yesterday's gap up and fade was followed by more fading today with another red candle for the VIX. The VIX down almost 5% to 1635. Note that we're still above the daily whole moving average and the 9 SMA. We want to see how the VIX behaves if this decline in volatility can continue down toward the mid 15 area, which is where both of those lines are. If the VIX reverses and seems to be holding that general area, which also has precedent going back to the beginning of the year with this 14 to 15 area being the low for the VIX, I would expect another surge in volatility. So with that said, unless we're seeing a regime shift in the VIX where we're going to the 12 to 13 area, I would expect any further index upside to be somewhat limited or maybe short-lived, even if it's a large spike. And we just have to be aware of where the VIX is and, of course, paying attention to hedging any of our long positions that we have in place.
Next, let's take a look at Apple. Pretty decent move today, up 3.81%, closing at 238.47. Coming up into our upper dealer cluster zone, this is an area where we have seen some resistance in the past, basically back at the end of 2024 into early 2025. So coming back up into this area, and we're seeing gamma exposure basically skewed to the upside. Very little negative gamma exposure, as you can see here by the red bars. And Apple has been trading above its 50-day EMA basically over the last month, with a 50-day EMA churning higher, just showing us that a new uptrend has been established. And I think reaching these strikes at the 240 level with potential further upside to the 250 level in the coming weeks.
Thanks, Anthony. A lot of the semiconductors don't look so hot right now. In fact, I'd say a lot of them look like they're heading on a trip toward Ouch Town, but Micron actually has somewhat of a bullish setup here. Yesterday's gap down actually rallied all the way to close above the daily hole in the 9-period SMA. Today's attempt to break below it also failed, and we have a positive GEX setup, especially up to 125 and high volume there today as well. Sometimes you can see individual participants within a sector do better than the overall sector, and I think Micron has a pretty good shot at making it up toward this 125 area. So keep this one on your radar for sure.
And you can get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies by becoming a member at geeksoffinance.com. Members also get access to the premium channels in our Discord community. We've got a ton of great traders in there sharing their own setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.